Hello, everyone. Welcome to this session on financial literacy. And today we are going to talk about how to practically use LLCs for various benefits that it offers. This meeting is not a professional advice. This is purely sharing personal experiences, opinions, and we will have some Q&A to the best of our knowledge. But again, I'm no professional and I have no vested interest in talking about what I'm talking about, except that, yes, I am passionate about sharing my knowledge. Let me jump right into limited liability company. What does it mean and what advantages it offer? In my own experience, I consider this as an essential tool for financial prudence. And if you want to make your life more controlled and probably planned, then this is one of the tools that you should really use. So there are four broad advantages that people use LLC for, and I'm going to talk about those. So there is liability protection. It's the most common one that people hear, and I would classify it as a inside out protection. I'll talk about it. What does it mean? Then using LLC for asset protection. Not many people may be aware of how to use LLC for asset protection, but we will talk about it in this session. And this is what I refer to as outside in protection. Family employment, again, a unique perspective. It's not something that you will start LLC for, but it basically, if you happen to be doing some business, some activity that can generate employment, then it could be one of the good thing about it that you can really get your family, particularly kids, minor kids who may have no other decent opportunity to earn, but they can probably get engaged in your LLC and start earning some money. And finally, some tax optimization it offers. I'm going to go in detail in all of this in a bit, but I'll talk a little bit about some common mistakes that a lot of people probably commit during setting up their LLCs, and we can talk about it as well. So I will totally take about 10 minutes of talking and then we will open the floor for discussions and question answers. So the common mistakes is that without in-depth research, you end up setting up your LLC in the wrong state. So in certain conditions, you are required to set up LLC in a specific state, but in other cases, you may have a choice and you may want to set it up in a state that offers some benefits. Again, LLC can choose multiple tax classifications, and people sometimes either are not aware or they choose wrong tax classification, and it may impact in many ways. Setting up LLC is not difficult, but it needs some level of discipline when maintaining it and running it. So a lot of people end up doing poor paperwork, and that basically, in a way, gives away a lot of advantages which LLC offers. That advantage may get lost because of poor paperwork. And one of the other mistake is that a lot of people consider LLC as their personal entity and they commingle funds and various things between their, say, personal checking account versus business checking account. This has nobody can control from outside because you ultimately control your LLC. But your actions basically takes away some of those advantages if you do some of these wrong actions. So let's understand a little bit about how to use LLC for asset protection and what does this mean outside in protection. So understand the scenarios that for whatever reason, if there is a judgment against you, if somebody sues you successfully and gets a judgment against you, and let's say that judgment is for $2 million. Now, to recover that money from you, the creditor can go after all your assets, whether that asset is the cash sitting in your bank accounts, any CD, any crypto, stocks, collectibles, real estate, that directly belongs to you, that all is exposed and that all can be taken away to settle that lawsuit. Now, while you have all those assets, but do you really need to have them in your own name? Probably not. So, if assets are kind of contained in an LLC, then theoretically they are not your personal assets. Any creditor who can sue you for your personal assets cannot attach the assets under your LLC. So all these assets, whether you have long-term stocks, you have cryptos, you have real estate or collectibles, if you detach them from yourself and if you put them under LLC, then that gives a level of protection that while your personal wealth, which is directly sitting in your personal checking account or in your name, that still can be taken away by creditors, but all your wealth that you have parked under LLC, that is protected. So this means that, let's say LLC is a box. If in that box you have put certain assets, then those assets are protected from actions happening outside that box. So consider that LLC is a kind of tornado shelter. Anything happening outside that shelter can get damaged, but inside that shelter, things are protected. So it's one of a very effective strategy to protect your assets, which are long-term assets, from your other exposure or liabilities. Now, every state has different level of protection, and you should carefully choose the state which has highest degree of protection in such a scenario. And the two things that you need to really evaluate is charging order protection. What is the strength of that charging order protection? And is it the only remedy available for creditors? So there are two scenarios. One, if you hold assets in your LLC and a creditor sues you, then a lot of states offer you very strong charging order protection. That means that no matter what, assets under a LLC is not at the disposal of the creditor, and the LLC as a whole can also be set outside of the disposal of that creditor. So you cannot take away the items in the box and you cannot take the possession of the box. So those are the two protections that basically ensure that your assets are hidden. Now think of this, that, oh, you hidden your assets in a box and that box is not accessible to anybody. So what's the good use of it? The good use of it is that you can still transfer those assets to, or that LLC to, one of your family member, or you can still make use in many ways of the value of those assets. But the moment you take those assets out again back in your name, you may still lose those assets because of the creditor. So there are other ways of how you basically make use of assets sitting in a treasure chest, which you personally may not be in a situation to take those assets out, but you can still enjoy the richness. So this is what I generally call being poor on paper but rich in real. And then if you do not structure your LLC correctly, then you may lose step up basis. And for people who don't understand step up basis, a lot of assets do appreciate over a period of time, particularly stocks and real estate. So if you hold stocks and real estate, and let's say theoretically speaking, today you buy a stock worth $100. In 20 years, that stock would become, say, from $100 to $1,000. So it has appreciated $900. And if you sell at $1,000, you are going to pay tax on $900 capital gain. Now, think that before you actually sell the stock, And again, it's unfortunate to speak, but it happens. Before you sell that stock, which has reached to the level of $1,000, if you die, then your kids get a stock valued at $1,000, but their cost basis is zero. And immediately after that, if they sell it, they don't pay any capital gain tax. So this is called step up basis. So all your real estate, if you pass it on to your next generation on your death, then for them the cost basis becomes the current market value rather than the cost basis at which you acquired. So you buy a real estate for $1 million. During your lifetime, you appreciate it to $5 million, and on your death, your kids receive it at a value of $5 million. But if they sell it at $5 million, they pay zero capital gain. So that's the step up basis. And if you do it rightfully, you achieve that step up basis within LLC as well. And that's how you basically not only protect the asset from getting stolen or getting taken away, but you also protect the step up basis for those assets. Now let's quickly talk about how do you protect any liabilities by using LLC. So not a lot of people do active businesses, but a lot of people also think that they are not doing business, whereas they actually are doing business. So if you own a rental property, that is a business activity. If you are renting out a house and you are getting income, then you are actually doing business. And business is allowed, irrespective of your visa status, you can do business in this country, right? Now, if you are doing that business, there could be liabilities. A tenant can sue you. Some incident can happen on your rental property. And there could be other businesses like you probably are uh, leasing out heavy equipments, tools, machinery, running a 7-Eleven store, you are running any other kind of venture like a restaurant, and you can be sued. Now, if you get sued and if you own that business in your name, then you are sued for your net worth. So whatever is your net worth is exposed to that creditor. So how do you, while you may take precautions of not getting sued, but if somebody sues you and successfully sues you, then you need to do the damage control. So one of the effective way is using LLC to conceal the business. So that means you are kind of putting the whole business structure into a self-contained box, and any infection, any contamination happening within that box remains in that box. It doesn't come out. That means the worth of that particular business may be at risk and you may not be able to prevent that risk, but because of that you may not lose any of other assets that you have. So take a theoretical example that you probably are running two restaurants and both the restaurants are, let's say, valued at $100,000 each. If one restaurant is getting sued and successfully, and both restaurants are, let's say, either in single LLC or directly in your name, then the total net worth of, let's say, 200,000 is exposed because of one lawsuit in one restaurant. But if you put these two restaurants in two separate LLCs, then the maximum you are going to lose is the wealth associated with one particular restaurant, which is 100K. So this is the damage control that the LLC offers. And to be able to control this damage effectively, if you are doing multiple businesses, you should be doing as many LLCs, segregate each business in its own LLC, and that means multiple businesses means multiple rental properties. So while it sometimes may not be very prudent to set up LLC for each rental property, but it is also a cautious decision that you are exposing those many properties to a single lawsuit that you put in a single LLC. So if you own, let's say, two rental properties, the best would be to have two separate LLCs for them. But if you put together in one LLC, then any one property gets sued, both property you may lose. So this is a thumb rule that when you are doing multiple businesses, your left hand should not know what your right hand is doing. And if left hand does a mistake, right hand doesn't get affected by that. So this is how you do effectively use LLC for liability protection. Using LLC for your family employer. So think of scenarios that you do have certain practical and legitimate business activities. While there can be hundreds of such activities, but let's say even if you run five rental properties do have their own taxations for profit and loss. But theoretically, you can say that to effectively put right kind of rental business strategy, or to do more research about rental properties, or to basically engage people in helping you evaluate rental properties, you are basically paying people. So that is considered a valid business activity. So if you are pursuing it as a business, whether that's one rental property, multiple rental properties, one restaurant, multiple restaurant, one car on Turo or multiple car on Turo, you can always have certain legitimate business expenses that can be written off, and you can also use some money from the profits to pay it as a salary to your kids. Now, kids should be of legal working age. As per different states, there may be different age for kids to work, but mostly 14 years and above. You can employ your own kids and generate their W2 or give them 1099. Now, if they get W2 and 1099, they becomes earning members, and every person who earns or who has an earned income can start contributing into Roth IRA. Roth IRA is a very good tool for retirement planning and building a corpus for your future. Literally, a lot of people have made a lot of wealth because in their early years they contributed to Roth IRA. So if for some reason you don't have from your employer, or your spouse is not working, or your kids are at that age where they can have the earned income from your LLC, then you can extend the 401k benefits, Roth benefits from your LLC to your family members, and that becomes a great way of not only building the wealth but also very early stage credit building. So overall, I think you can use LLC to generate employment for your family only if you are having certain business income. And those certain business incomes could be so many things. Like you can legitimately run a food delivery business, or kind of a car renting business, house renting business, and so many things, right? Now, coming to the last leg of advantages, LLC can be used effectively for tax optimization. Again, one of the unheard of, or I would say not many people know, that if you have certain legitimate business income, then you can offset that income by an expense which is legitimate and which is to your benefit. So let's say you have your primary home and you take maybe some vacation time in a year. So if you can rent out your primary home for less than 14 days, then if you're charging a fair market rent for that primary home for those 14 days, then that income is tax-free income. Now, for example, you are living in a good house which can fetch probably per day rent of $1,000, and if you rent it for 14 days, then you made $14,000 income. Now, probably you will not find tenants who are going to rent your house for 14 days, but your own LLC can rent it, right? So your LLC pays $14,000 as a rent to your primary home. So you as a person receiving the rent, you receive it tax free, but the LLC takes it as a tax exempted expense or expense that can be set off against the profit. Now, this only works in case if LLC is paying 14,000 as an expense, then it should have $14,000 as income from some other activities. So that's how it can save on taxes. Similarly, there may be many permissible deductions that a LLC can take. For example, let's say you want to buy houses, put them on rent, or you are exploring business, doing research. So you do a lot of commute. You can use miles to deduct as a miles for business expense, and you can probably write off many other expenses like maybe home office, maybe certain other permissible things which any CPA can guide. So with LLC, it becomes easier. Depreciation of assets. If you have assets in your LLC and if those assets are depreciable, then that again is an advantage that you as a person cannot take, but LLC can take. Your couch, your car, your computers, your things like any kind of furniture can be depreciated by LLC, and that depreciation can be benefited to offset any business income. Now, this kind of tax optimization works only if you really have legitimate income in your LLC. So you cannot have a fictitious non-income producing LLC and still consider tax optimization. And again, any income that comes from your business is also available for QBI deduction, which is a qualified business income deduction. So any tax that you save is also an additional earning for you and your family. So if you do have any legitimate business, then it is better to do that business under LLC rather than in your personal name and make it complicated. So those are the only good big advantages that LLC offers in terms of making your financial life more organized and pragmatic. So with that, I'm done for sharing a bit of my insights and knowledge about LLCs, and I welcome any questions, any open discussion about what you specifically want to know, want to discuss. I'll try to do sharing based on my own experiences. Again, I'm not a financial advisor. I do it only because I'm passionate about it. So over to you guys. If you have any open questions, if you have any specific topic that you would like to discuss, feel free. Rohit Kamboja has something. He raised hand.
Hey Mukesh, I had one question in chat. We can address that later. One thing I want to understand is when you started your discussion, you mentioned that one primary reason for moving your own personal assets like stocks and other things to LLC is so that you can protect the box, right? If somebody sues you, your own assets are not visible to the creditors because it's parked under LLC. But what if somebody sues the LLC?
Somebody sues the LLC for what? LLC can be sued only for the reasons associated with that LLC, right? Now,
Yes.
if you have a box that has stocks and that has your CDs and that has your, let's say, any kind of assets which does not generate liability, holding stocks as an activity cannot create a liability in any way. Holding
Mhm.
real estate can create liability. Holding a car can create liability, but holding stock cannot create liability. So if your LLC only holds stocks, crypto, cash, let's say collectibles and arts and all that, then
Mhm.
nobody can sue that LLC because this LLC is not doing anything to anybody, right?
Yeah. So even so, what you're suggesting is even let's say if I'm not doing any business, right? Let's say I don't have any restaurant, or if I'm not doing any business, even then, is it advisable to put my stocks and everything and form an LLC and put everything in that?
Yeah. So just to clarify for everybody, always one LLC for asset protection, one LLC for active business. Never mix the two. So
Okay.
if you are doing active business, then that active business should be only holding the operating cash and no asset, right? Try to make it as poor as possible on paper if you're doing active business in that LLC. Do not hold your assets in a LLC which is also doing active business. So if you have a scenario where you are doing active business, then treat it as a very distant cousin of yours that you never want to talk or associate with, right? If
Mhm.
you are having no business and only want to protect your assets, you still do it in LLC, and that LLC will never do active business. That LLC will be a dummy vault,
Okay.
and that vault is to be secure.
And the one question which I had on chat was, can we still open LLC while on H1B?
So forget about H1B. Even if you have never seen the USA land, you can still set up LLC. You can still run the business in this country if you don't even know where on the map is USA.
Okay.
So this is one of the biggest misconception that people worry too much about. Can I do this thing while on H1B? Can I do that thing? You cannot do compensation based employment while on H1B without a backing H1B. But you can do a lot of other things. You can do stocks, you can buy real estate, you can rent your real estate, you can set up LLCs. All right. Any more questions from anyone?
Hey Mukesh, this is Anjan. I raised my hand too.
Yeah. Yeah, then.
Hey, first of all, thanks for the great session and
Mhm.
great pointers too. Some of these were eye openers to me. One of the question I had for you was, let's say I have a, I mean, not let's say, I have a primary home, which is a single family home,
Mhm.
and I just finished a basement in it, right? And
Mhm.
then, my wife and I realized that we don't really use the basement, so we thought of renting it out. Now, if we rent the basement, do you think, like based on some of these pointers, do you think that we should bring the primary home under an LLC since I will be getting a rental income from that basement, but it's still a primary home? I was just curious about a scenario like this and what is your guidance around such a scenario?
Okay. So again, I will share only to the extent of my knowledge and don't take it as a professional advice, but I will give you some suggestion. So
Sure.
your primary home has two portions, one that you are living in and one that you want to rent out. I
Yeah.
would suggest, if I were you, this is what I will do. I will create an LLC, which will be something like XYZ Renting LLC. That
Right.
XYZ Renting LLC will rent the primary home's basement from Anjan. It will say it will enter into a lease agreement that XYZ Renting LLC leasing the basement from Anjan Saha, right? And XYZ Leasing LLC is
Hmm.
also owned by Anjan. Now, whatever renting further, this XYZ LLC will be leasing it further to XYZ or ABC or any tenant. So if
Right.
that tenant sues, they will sue only XYZ LLC. And XYZ LLC doesn't hold any asset. It only
Correct.
holds the lease. So if your tenant is able to sue you, then you may
Right.
lose your primary home. But if they sue your LLC, then LLC has nothing.
But they can sue me as well. Oh, because
No,
I rented them under the XYZ LLC. They
no.
have no connection with me. Is what you are alluding
Yes.
to.
So the
Okay.
moment you created LLC and the lease agreement is between the tenant and the XYZ LLC, then
Right.
Anjan is nobody.
Got it. Okay. So basically, this is a facade that is being built on top of
This is a
the real
rightful
entity.
facade. This is a
Correct.
rightful facade. Your
Correct.
LLC can sue
Mm.
you, but will you sue? Will your LLC sue you? Because you control your LLC, so your LLC will never sue you. But
Good. Got it.
any tenant can sue your LLC.
Got it. Sure. No, this is helpful. I mean, thanks for the suggestion, Mukesh. I've never thought about. Forget about thinking about this matrix. I've never thought about LLCs, but
So,
yes, I'll
Anjan,
definitely ponder about it.
these are some of the common problems. Like,
Yeah, and I'm sure that a lot of people like us are not educated around this, and thanks so much for at least lighting that fire.
Mhm.
But at least I have never thought about such scenarios, right? I mean, I know about liabilities and people getting sued and all of that, but it's just that we don't really get into such intricate details about it. But yeah, thanks, Mukesh.
Welcome. Anybody else?
Yeah, Mukesh, I have
But
one.
if I take this discussion,
Yeah,
sorry, go ahead, Mukesh.
one quick question. From the execution perspective. So suppose I was living into a house, and now I moved out of that house and get into another house. And the previous house I rented it out. I already having a loan on that. Is it still possible to move the property into LLC without closing the loan? So how exactly the loan process works when kind of creating a new LLC for the property you own the loan on?
So there are two possibilities. One is most of the loan documents explicitly have a clause which says that any kind of title transfer needs to be first approved by the lender. If you transfer it to an LLC, then they may invoke due on sale clause or the loan recall. Now, whether you do a title transfer to LLC or to your trust, you should first seek approval from your lender. Many lenders will never worry about it as long as you continue to make their loan payments. But in scenarios where you took a loan for say 2%, 2.5%, and today's market it is 6% and above, many lenders would look at the opportunity to recall the loan. First of all, do not simply blindly following anybody's advice. Do not simply transfer the title of your previous primary home into a LLC and risk kind of losing your loan. There is a practical path to do that, and that practical path is first of all, read your lender's contract, and if it has some language around this, then get an approval from your lender. The approval you seek from your lender could be one of the two things. Do they allow transferring it into LLC as long as you are the 100% owner of that LLC? And many banks will say, as long as you are the 100% owner of LLC, we will allow you, no worries. Good, your life is sorted. If they say no, we will not allow you to transfer it into LLC, then there is another cryptic path, which is you transfer it into a land trust and you are the trustee as well as the beneficiary of that land trust. That is the step number one. You transfer it into a land trust. Once you have transferred it to land trust and you have paid at least one EMI to your mortgage, then you change in your trust agreement the beneficiaries of that trust. So originally you were the beneficiary of that trust. Now you change the beneficiary to a XYZ LLC. And that XYZ LLC is something that you own. Document or trust agreement is generally a private document, and no lender needs that agreement for any purposes, as well as that agreement is never registered in any kind of uh, public records. So you have privately changed the beneficiary of your trust from yourself to your LLC, and that's the way of doing it in LLC. Now, if somebody sues because of that house, they will sue the land trust and the beneficiary of the land trust. So they will ultimately sue the LLC, and that LLC has nothing else but that house. So this is the way that you do in case of a pre-existing conventional loan on a property that you want to transfer from your personal name to LLC. This is the path.
Awesome. This was helpful. Thank you. Thank you, Mukesh.
Welcome. All right. Anybody else? I don't see any queue, and if there are no more questions, then thank you all for the session.
Mukesh.
Oh, go ahead.
Hey, Mukesh, this is Shri Krishna. Hey, one question. You slightly touched upon the S Corp, right? Versus
Mhm.
LLC. Are there, because from what I read, as LLC are like a pass-through liabilities, right?
Yep.
But S Corp might be a better option if you are able to make one, right? Are there any disadvantages and advantages there?
So let's understand what is S Corp and what is LLC.
Mhm.
So LLC is an entity
Mhm.
which can be treated for tax purposes as LLC, as partnership, or as S corp, or as C corp, right? So it's like a kind of joke that, oh, I am LLC, but I recognize myself as S corp. So you can take advantages of S corp while you are still LLC. The vice versa is not true. You set up an entity called S corp and you work it as S corp. So for most practical reasons, you set it up as LLC and get all the benefits of LLC, and then you notify your IRS that I want to recognize this LLC as S corp. And there are certain pros and cons of setting it up as S corp, and you should be very clear about why you want to set it up as S corp, right? There is a reason. So an entity held by non-US person cannot be S corp. LLC can be set up by anybody, including a foreigner who has never seen USA. Other thing is S corp has more compliances, and it kind of has different kind of tax filing. But eventually, because entity is passed through, whether it's S corp or whether it's treated as disregarded, it is still passed through. S corp doesn't pay taxes. S corp only simply tells the IRS that who are my members or shareholders and what is the revenue and expense I have done, and then it basically let the members or the shareholders of that S corp pay their own individual taxes. So there is not much difference in terms of taxation or pass-through part of it. The thing is that S corp, if you do your LLC as S corp, and if you want to generate or take the advantage of payroll, then S corp is better. In LLC, if you do not declare it as S corp and if you generate profit, then you are subject to self-employment tax. But in S corp, if you generate payroll for the owners, then all the profit after running the payroll is not subject to self-employment tax. That's the major advantage.
Okay.
So
Awesome.
be careful when you put assets under S corp. That you need to be careful about the step up basis. I talked about it. What is the step up basis? You may lose step up basis if it is under S corp. There may still be possibility to preserve that step up basis, but there may be extensive documentation and possibilities of rejection.
Got it.
Okay.
Thank you, Mukesh.
Welcome.
At the beginning of the session, you showed a slide where you mentioned something about which states are good for opening LLC, right? You might probably touch base a bit upon that.
Again, as I said, if you are doing active business, then it has to be done in a separate LLC. If you are not doing active business but wanting to create asset protection LLC, then that doesn't need to be registered in a specific state. So let me first make it clear. If you are doing business, then every state wants to take a pie of your business income. So if your business is either generating revenue from that particular state or you are paying the payroll or expenses in that state, then you are doing business in that state. That means that no matter wherever you initially set up your LLC, if you are doing business in say 5 states, you are going to register your LLC in those 5 states. So you do not have a choice for choosing the registration state of LLC if that LLC is doing active business. So if your restaurant is in California, you have to register your LLC in California. If you are renting a property in Arizona, you have to register your LLC in Arizona. But if your LLC is for asset protection, and let's say you want to just park your stocks, crypto, CDs, parts, collectibles, and other things into a LLC, and that LLC is not doing business anywhere, then you have the freedom to choose wherever in USA you can register that LLC. To my knowledge, the best state for choosing LLC for asset protection is Wyoming. it has its own reason. A lot of people may come up with suggestions like Delaware, like Ohio, like there are multiple states. But from my perspective, if you are setting up LLC for asset protection, set it up in Wyoming. Very cheap cost of setting it up, very cheap cost of maintaining it, and the strongest possible protection.
Okay, thanks.
Mhm. All right. Any more questions? Any more discussion points that somebody may want to trigger?
You,
All right.
I think previously took a session regarding, give some introduction on the investing in single family homes. Is that session available on YouTube?
Yes, on my YouTube channel, there are at least 2, 3 videos on single family rentals, and that's my active business where I basically invest in single family homes and I uh, offer co-ownership to individual people. So if you are interested in that, yes, there are sessions on YouTube channel where you can see. But if you want to interact with me directly, you can ping me and we can talk about it.
Sure, thanks.
All right. Thank you, everyone. And feel free to ping me for any follow-up questions or if you want to talk to me. I love talking and I love sharing what I have learned. So consider this as my hobby and feel free to kind of connect with me. Thank you all.
Thank you.
Thank you.
Bye bye.